You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music can mean but one thing. We are back. Did you miss us? Yeah, we were gone for the Monday Labor Day holiday here in the U.S., so we got a nice long weekend, which is always nice. You know, sometimes it's just you need a nice little refreshing break, and that was nice. It helped the Rock Lobster clear his head of the cobwebs and all sorts of fun stuff. But we are back. Did you miss us? We are back here for the second dose of what is usually the second dose of your bi-weekly options extravaganza. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old network. You guys can get it on a legion of platforms. It seems like there are more all the time on the on-demand side. Every day we're getting hit up by a new platform saying, look, we got all your shows, come claim them and everything. It's like, how many can there be? But there are always more. So you have no excuse. Every platform under the sun on the on-demand side carries our stuff, and they're more of a trying to get it all the time. So it's up there all the time. If you have a platform you use that's obscure for some reason, doesn't have ours, let them know, and they'll let us know, and it'll get going over there. Of course, if you want to engage more, we have the live throughout the week for the Plus folks. If you want to go above and beyond, super fun stuff. We have the legendary author of Market Wizards coming up next week on our pro Q&As, as well as, of course, options, oddities, and a bunch of other fun stuff. You know where to go to find out more. TheOptionsInsider.com/pro. That is the place to go. And, of course, wherever you go to listen to this content, keep hitting us up, questions, comments. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the old show today. First off, let's go out to a sleepy hamlet outside of Chicago, where we are joined once again by the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to Ye Old Program, sir.
Always great to be here on Ye Old Program. Excited that we get to still do the show this Thursday. Couldn't do it on Monday, unfortunately. But, hey, once is better than nothing.
You can't labor on Labor Day. People frown on that, sir. We do not wish to be frowned upon here. But you know who doesn't mind frowning? Because he's probably frowning right now as I toss it to him. Yes, he is the grumpiest of lobsters, Mr. Andrew GIOVINAZZI. A little less grumpy these days. It seems like most of the haze and fog has lifted from the GIOVINAZZI compound. Of course, I'm talking about the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the program. How goes the fog, sir? Has it finally lifted?
I would say it is slowly lifting. It's. I would say probably I'm going to go with 85 to 90% back to capacity at this point. Still can get a little tired though. So yeah, I talked to some folks and they said it kind of could linger, like the tiredness could linger for a month or two.
Well, this show can't linger for a month or two. We got to get rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block, the portion of the show we break down what the heck is trading, what is lighting up the tapes here as we kick off ye old program proper. And, not a heck of a lot, quite frankly, from a major index perspective. The markets are kind of struggling to find their footing today. Dow and S&P pretty much unched to off ever so slightly, both of them off 0.01% right now. So not a heck of a lot of movement really on the Dow or the S&P front. Of course, coming into the start of the show, we're seeing the NASDAQ getting a bit of a lift, up about 0.25% on the day. So we got a nice mixed latter portion of the week. And coming into showtime, we did see a little bit of a sell-off earlier in the week. And so that did jack up the vol a little bit. Coming into showtime, we had VIX at a America appropriate 1776, an excellent year, and also up about 1 3/4 point from where it was on our last show, which remember was a week ago, listeners, was not on Monday. So bit of a pop out there in VIX land. Can we maintain it? Well, that is always the question whenever we get these pops. And as of right now, it's actually a little bit higher, trending closer to the 18 hand. Let's see, how high do we get today? Looks like we got up to about almost 18 1/4, 18.21 out there. So we got an 18 handle back again in VIX land, listeners. And of course, earlier this week, we got a little higher. We got up to, looks like about 1909. So we actually had a 19 handle ever so briefly out there. Not, of course, today. Back to the American only 1776. VVIX at about a 112, up about 7 points from this time last week. And VXX at about 25 1/4, up about 0.5 point from this time last week. And Vol Q, like we said, NASDAQ's the only thing kind of moving out there today. Vol Q at about 16 1/4, so back up from the 15 handles, 15.5 last show, so up about 3/4 point from where it was this time last week. Let's go back around the horn. Let's start in the land of shadows and fog known as Maine. Mr. Rock Lobster, sir, we actually saw some vol come creeping back in earlier this week. Not so much today, but the session is still young. What is lighting up your tape out there today, sir?
Yeah, I saw the same thing, but I had I think to get a real change in vol trend, you need 3 days in a direction to change the trend. But I would call my Andrew's simple 3-day rule. So yesterday, I would say was like, okay, we had a pretty good pop in vol Tuesday, yesterday, Wednesday. VIX futures were up fractionally, but the actual IV was lower everywhere. Even it was just a little bit, but it wasn't higher. And then today we have the doji of all dojis is that when the market doesn't go anywhere, it went up a little, down a little, and it is sitting at Nowheresville. So I think anyway, waiting on the news, like the employment number was pretty good. Might have something to do with all those benefits expiring and people now looking for work again. But as far as, crossing my plate here. So one thing I would say is, it's when you were looking for a vol trend change, and I'm just talking about just pure VIX, not individual equity. Everything can be it can be slightly different drivers, but most of VIX is sentiment, and that's kind of what I would call the big macro global sentiment stuff. And one thing that I will say though is VIX did not make a new high yesterday, although it had an intraday high. But the volatility has not pulled back to the low. It's basically right around where it closed. So whatever that, let's just call it sinking feeling that was in the market, has not translated into a wider sell-off of vol as of yet. It could happen by the end of the day. It is a Thursday, so we're looking at a Friday potentially for a vol markdown, and I'm not seeing it yet. But anyway, just be that as it may. I think so we're kind of in this sort of wait and see area. I've got some positions on, nothing's really doing anything, to be honest. So and I just think that's where we are as far as catalysts to go higher. I think better COVID news is good. I think changes in like globally, like England, all the places that had the Delta variant, you don't hear about them anymore because all the cases have gone down dramatically, which I think overall is a positive. Although I think it is filtering into the travel and leisure industry a little bit today. If you look at some of the names, the airlines and cruise lines, stuff like that, hotels, all have a little bit of a bid today. But those are coming off of recent lows, again, like what I would say the Delta lows, Delta variant lows. So I think that's overall a positive. But as far as like, can the market like continue to make new highs? I think we're looking for a catalyst. The ECB now just is saying they're going to finally stop buying, slow down asset purchases, which means the Fed can't be that far behind. And as of right now, we're kind of taking it okay. The last time the Fed aggressively stopped, actually, and they started selling assets back to the market, you have to go back to December 2018, when the Fed last was reducing their balance sheet. So we've been in this now for 2019, 2020, and half of 2021, 2.5 years of increasing the balance sheet again. Now, I would assume that the market will drop once the Fed actively stops buying securities. Because again, that's going to soak up some liquidity. So we'll see what happens. As of right now, though, market doesn't care. So I'll be interested in TOSAW's take on that. But again, it would not surprise me if highs of the year were only like within 2 or 3 percentage points from where we are right now.
Yeah, it will be interesting to see. You could make a strong argument that most of the strength of this V-shaped recovery and rally beyond it has been on the back of the Fed. So if the Fed steps out, what is bolstering the market? We've got Nichols in the chat saying, if the Fed gets out, then look out below. Yeah, certainly you're not alone in that sentiment out there. Let's go on out now to a guy who is our resident permabull. He don't care what the Fed's doing. He's in for the long haul, baby. And if the Fed gets out, he's just buying more all the way down. That is Uncle Mike. Is that a good picture of you I painted, Mr. Uncle Mike? What is lighting up your tape today, sir?
So first off, I want to answer a question that Andrew posed. Can the market continue to make new highs? Well, duh. The answer is always yes to that. I mean, when is the answer not wrong? Am I right?
You are correct. It can. It can make new highs every single day for the rest of the year. 100%.
Yes, absolutely. So anyway, I think that I agree with Andrew from the standpoint that when the Fed stops buying assets, that is going to be a problem for the market. I remember vividly December 2018, and that I was bullish going into the end of the year, and I actually I was having a good year, and I'd had a good year that year, and I remember thinking, okay, I'm bullish, but I'm not going to let a good year turn into a bad year. So I thought, you know what, I'm just going to take a small amount of risk. I'm buying out of the money calls essentially. And then if you look at a chart from 2018, man, was I dead wrong, which goes to prove to you that risk management is always 100% always more important than market sentiment. I don't care how good your indicators look, whatever the case may be, risk management has to be paramount. And so with that being said, what I'm looking at right now, we've had a lot of movement throughout the day today in terms of the S&P futures. So if you look at since close of the cash markets yesterday to today, we actually have about a 1% range in the marketplace. So we were way down early today. We actually have a little bit of a rally right when the cash markets opened at 8:30 a.m. Chicago time. And then we're kind of right back to where we started the day off today. So we've had movement. We just haven't been able to make it go one way or another. Everything is pretty much flat right now from the standpoint of stocks. We do have a little bit of a bid going in the financials with XLF up just under maybe 0.8%. So there is something happening in the marketplace. So as I look at it, we do have that happening. Also, we have a little bit of a bid in the 10-year, so we have a little bit of a rally going there. So yields are coming down a little bit. Typically, when you'd see movement like this in the 10-year, you'd see a little bit of a market down day. But nonetheless, we are still relatively flat on the day. We're down a whopping 3 points, which is by no means anything huge with the S&P 500. What I think will be interesting is to see how people position themselves going into the weekend of this week. We did have lower volume earlier this week because, or I believe, just because of the holiday. I believe it's Rosh Hashanah. If I pronounced it incorrectly, I apologize sincerely to any of our Jewish listeners. So we had that, and then I think that when we have lesser volume, we do get a little bit more intraday volume. So we have that happening, and then ultimately, or as well. The other thing that happened this week is the old saying, sell in May and go away. After Memorial Day, get out of the market, stay away from it for the summer, and then all the big money comes back on the week after Labor Day. Well, that hasn't been the case so far this week, so maybe they're waiting for, maybe the big money must have got their flights delayed, or they want to stay at their houses in the Hamptons a little bit longer because it hasn't happened as of yet. So and I'm cool with it happening tomorrow. So we can start tomorrow and we'll take care of everything then. So that would be a good thing for all of us bulls out there. So I think right now we are in a wait and see type of mode. What are we waiting and seeing? We don't have a big unemployment report coming up. There's nothing big happening. So the fact that we're not moving that much, I guess that tells us that we're just not moving. But I will say this, since the time I've been speaking, the S&P has dropped 10 points. I'm going to shut up now.
There you go. You're spooking it all out there, Uncle Mike, our resident permabull. Let's see if things are lighting it up from an overall index perspective out there. And VIX, actually putting up some numbers today, which kind of speaks to what Uncle Mac was saying earlier. We had a little bit of a range before we kind of settled out at a whole bunch of nothing right now. VIX, 313,000 contracts on the tape right now, which is decent, especially considering the ADV is 429. So it's already most of the way there. So we'll see if today will be a robust day or not. We'll break down the numbers in more detail tomorrow on Volatility Views. SPY already at about 2.25 million contracts. The ADV is a little bit under 4, about 3.92 million out there. So about half of a day's worth of paper already on the tape. And SPY, about what you'd expect. The S, 610,000 contracts. The ADV ticking up out there. It's been at 1.25 for a long time. Now it's up to about 1.33 million out there. So the S looking a little bit more robust these days. The Q, 602,000. The ADV about 1.3 million out there. So kind of light volume for the Qs. And small caps, at least the IWM variety. We'll get into RUT and everything else a little bit later with the once and future Dr. VIX, Mr. Rhodes, coming up on TWIFO in a little bit. IWM at 350,000 contracts exactly. The ADV, 612,000 out there. All right, let's see what's going on from a single name perspective. This is where a lot of the action has been in the space right now. And you might think, since they're popping off from an earnings perspective, you might see the king of the memes, the one that kind of started this whole frenzy, GameStop. They were after the bell, and no, you don't. They're not in the top 10. They're actually only at number 15 with 186,000 contracts on the tape right now. It's certainly decent paper, but it ain't enough to break into the top 10. That cost you 213,000 contracts today. That will get you to American Airlines. Number 9, getting memey out there. Support.com is the place to go. Number 8, AMD, one of our symbol twins here. Let's see if we see the other. Well, that will be a spoiler. I won't say that. AMD, number 8, 227,000 contracts on the tape. Speaking of meme names, you folks have memes on the brain, so we thought we would put that to you this week with our question of the week. We've seen so many hot meme stocks explode onto the radar in recent months. Quite simply, which of these names has found its way into your options trading account? Don't see your favorite new obsession on this list? Just hit us up with your suggestions. Give you 4 choices. Good old supports. Any one we were talking about earlier this week. And then good old CCJ, a.k.a. the Canadian Uranium. Say that 5 times fast. Or good old Clover Health, which is, spoiler alert, coming up a little bit later in a few minutes, actually. At number 8, we've got AMD, like I said, the other first of our symbol twins here, 227,000 contracts. Number 7, The Amazonians back on the list at 232,000. Number 6, we didn't put BBIG. You can only put 4 names in our meme palooza here, but BBIG could have been one of them there as well. They're at number 6 today with 237,000 contracts on the tape. Let's see what BBIG is up to right now. By the way, listeners, this is, of course, Vinco Ventures. It's only up a comparatively modest 47 cents, or about 4.6%, which is not a heck of a lot for a meme name, trading right around 1070. Let's see. Today it traded 990 all the way up to about 1070 where it is right now. So had quite the range throughout the day here, but 981 actually is how low it got. And the good enough for a lot of paper, 237,000. So Vinco Ventures, they could have been number 5 on our meme top 4 there. Number 5, we got Clover, back to Clover Health, 259,000 contracts. They are on our meme palooza over there at options. Number 4, Moderna, 335,000 contracts. Number 3, the other half of the symbol twins there, AMC. You could argue they are really the reigning king of the meme. They've kind of taken the crown from GameStop and said, hey, hold my beer, kid. I'll show you how it's done. 477,000 contracts on the tape. So you're talking more than 2x. What's going on? About 2.5x of GameStop out there today. So is that the only barometer for who's the king of the memes, the options volume? For us, it is. On this show, it is. That's kind of the key metric, key driver for us. And certainly AMC taking that one. What could top AMC today? Well, it's Tesla, number 2, 655,000 contracts. And the big dog out there, even though kind of a little bit smaller today than it usually is, 830,000 contracts on the tape for Apple. We were breaking it down yesterday. There were already 1.2 million contracts on the tape by the time we were talking about Apple yesterday. And of that, over 700,000 were going away in about less than 9 days. So a lot of weekly action in Apple. We talked about an options oddities last week. I got a feeling we'll get into it tomorrow as well. Speaking of stuff we'll get into a little bit later, looks like we've got in the chat, we've got Limited over there saying someone pulled off nearly $2 million trade in 4 $10 puts far out. Jan 2023 $10 puts for over $1. Yeah, we noticed those. And I think we'll talk about those tomorrow on oddities as well, Mr. It looks like they had a collar leg with them, which makes them interesting. A 2023 collar, is that kind of how you want to put it up? We'll get into that, break it down in a lot more detail tomorrow on Options Oddities, listeners. So stay tuned for that. If you're not part of the secret club, theoptionsinsider.com/pro is the place to go to get all that and a whole bunch more as we keep on rolling. In terms of earnings, like we said, there still are some names popping off, including some names you may have heard of, like GameStop. They were after the bell yesterday. They went into their announcement, $198.80. They were pricing in, 12.5%. So a wee bit of juice for gamey these days. They ended up delivering 7%. And wow, as of right now, they're back up to 195.63. So they're only off 1.5%. Oh my goodness. So this, this is just the pandemic era in microcosm here. You expect a lot of juice. You get almost none. Wow. Who would have thought that, premium harvesting would be an easy road to fame and fortune in a name like GameStop? I'm joking, of course. That is not the case. But in this particular earnings event, yes, that was the case. Wow. This thing did a whole lot of net nothing. Obviously, it had a range, so you had to sweat for it a little bit. But still, at the end of the day, it came back to you, which is that kind of boomerang action you're looking for if you're selling premium. LULU, they of sheer yoga pants infamy. I'm never going to let that one go. That's just hilarious to me. They were at $380 going into their announcement yesterday after the bell. They're pricing in 5.3%. And LULU, bucking the trend a little bit, they delivered 11.3%. So more than doubling their earnings straddle. So that kind of gets back to the trend Matt and I have been talking about this season now. It seems like we're getting that outperformance. GameStop notwithstanding, that's funny that GameStop would fail to deliver almost nothing, and then LULU would blow the doors off. But that's kind of where we find ourselves right now. LULU right now, 423.78. Like I said, they're at 380 pretty much, almost 381 going into their announcement. So a big move for LULU. Apparently, people are buying those sheer yoga pants again. All right, let's see if any other names are popping off here. By the way, we do have the updated earnings season reports here for you. And we're standing right now, week 1, 76%, week 2, 57%. So week 2, the dark night of the soul here for this season. Week 3, 67%, a little bit better, still not great. Week 4, 107% outperformance. That's a very rare thing, a green. You don't see green on these reports very often. And week 5 so far, holding firm at about 100%. So we got a break even for week 5 here and actually making some money for the first time in ages in week 4 from a premium buying perspective, obviously. And that's averaging out to an 86%, which is kind of holding firm and still one of the best seasons we've seen, perhaps since the pandemic began. I really have to go crunch the numbers to make sure, but that's pretty robust, to put it mildly. Coming up today after the bell, we've got Dave & Buster's, a.k.a. Play. You know, that in-person gaming space, kind of a challenge during a pandemic. We'll see how that one fares. They're after the bell. They're at 34 3/4 as of this report. By the way, these reports hot off the presses for you folks right before showtime here. You can find them for yourselves, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side there. And let's see, they were pricing in $2.78. In the past, they've moved $2.31. So a little bit extra juice. You can maybe argue it might be warranted in a name like Dave & Buster's, but again, that road lies madness for the rest of the pandemic. So we'll see how it works out. And we've also got Kroger, the supermarket folks out there. They're tomorrow before the bell, 46 1/4 is where they were trading. They're pricing in 1 3/4. In the past, they've moved $2. So a little bit light on the vol side, which again, is kind of hard to argue against that given everything we've seen. Will Kroger outperform? Is there some hidden vol to be found in the supermarket side of the aisle? We shall find out as we keep on rolling. Yup, it's that time, listeners. Buckle in. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that music means it is time to unleash the beast, unleash the eye of Sauron upon these unwitting markets and see where it fixes its gaze first. And it looks like it is staring very intently at COTY, ticker symbol COTY, C-O-T-Y. This is a multinational beauty company founded in 1904 by, appropriately enough, Francois Coty. Trading right now, $8.37, up about 8 cents. So not a huge day for them today. Let's look at the year that's been out there in Coty land. Yeah, they had a nice year. A year ago, it was trading $3.70. And then they sold off down to about $2.65 in late September 29th to be precise. And they kind of hung out around that level for a while until November. And they started kicking it into high gear in November. They shot up from about $2.90 all the way up to $4.45 on November 9th. By November 24th, they were trading $7.55. So that was a hell of a month of November here for Coty. They had more than doubled. And they kind of hovered in that $6 to $7 range all the way through January. Then they started popping up again. By February, they hit almost $8, and they kind of gave it back again. It was a little brief blip. Then they started rallying again, and by March 15th, trading $9.37, got up to about $10.50, which was pretty much their high for the year back in May. And then they kind of sold it off again, and they've been bouncing around this kind of $8.50 range for the better part of the last few months. Until August rolled around, they were right around $8 again, and they shot up to, looks like about almost $10, $9.77 just last week. And then they kind of gave it all right back again. They sold off back down to about $8.29, which is close to where we find them today. So interesting little saga. I wonder what was popping off there. Obviously some good earnings or something back in November of last year. That really seemed to be the catalyst that sparked the flame here for Coty. And you know what, Mr. Rock Lobster? It seems like someone thinks the party has only just begun here in good old Coty, because they came in saying, how are these Nov 8 calls? I'll take all that you got, to the tune of $18,236. They gobbled those bad boys up for $1.15. That was pretty much right off the offer. There's nearly a 70 vol if you are interested, listeners. So that's a lot of juice for a beauty company. Of course, this chart has had some movement a little bit lately, obviously, but the big move came November of last year. Kind of been mostly hovering in this relatively similar range outside the last couple of weeks for the better part of the last, 6 or so months. But that's a lot of juice for COTY. And then they decided, you know what? We kind of like these. We're not done. We want more. They came in and now, as of Showtime, had bought a total of 25,000 of these Nove 8s going up today. Again, we're trading $8.40 right now, so these calls are in the money, but they paid a hefty premium. They paid $1.15, aka about a 70 vol here. Mr. Rock Lobster, this is kind of the trade du jour in the pandemic era. The typically out of the money, now it's in the money, but a lot of meaty, optimistic calls on a pretty cheap name seems to be kind of everyone's trade du jour these days. What do you think of these? What do you think of these pretty pricey, pretty vol juicy calls here in COTY, sir?
So this used to be a pretty interesting.
Uh-oh, we lost you, sir. What happened? Did you hit your mute button?
I hit my mute button, but I didn't do it right. Can you believe that?
That button is so hard. It's on or off. It's so hard to understand those nuances, sir.
It really is quite difficult. So this COTY is I know fragrance and makeup and stuff like that. Like this used to be an interesting stock way back when. And I don't know, it looks like they got kind of hurt because nobody was buying lipstick because everybody was wearing a mask. Like who puts on lipstick, right? But I believe, I don't know if they
speak for yourself, sir. I like to look my best at all times. Thank you.
Exactly. But also I thought at one point they were trying to buy out, Amway. What's that, like the door-to-door cosmetics lady sales thing?
Mary Kay?
Mary Kay or Amway. One of those two. No, it was a publicly listed company. It wasn't Amway. It was, oh my gosh. I can't believe I can't remember the name of it. My brain has just gone to mush. Oh, geez, Louise. It wasn't Amway. Oh my gosh. It wasn't Mary Kay. There's one other one. Jeez. Anyway, it'll come to me. It was DeVos. Was she Amway? I think it was her. Anyway. It was a listed company, and then they stopped by it and get interested in it. This has always been an interesting value play. So I don't think this is a bad call purchase. I think it makes a better put sale than a call purchase personally. And the only reason I say that is, cosmetics companies, they don't, unless they kind of catch fire, it could work. All right. I don't think these are reasonable. They're buying enough time. The stock was just around $9.50. Again, I don't think this is an unreasonable purchase. However, I would be more apt to sell the 8 puts or the 7 puts a little farther out or something like that. Because you're on yield, you're selling a 10 lot that's $350 to take the stock at $8. I like that trade better personally. But it doesn't mean that you can't make money buying these nodes. You got 30,000 contracts traded, and it does pass the option block test for buying calls. That the same day you buy the calls, they are bid higher than what you paid for them. So again, I don't think it's an unreasonable price. 67 vol, not too bad. The stock's been moving around a little bit. Yeah, I don't think it's an unreasonable trade at all.
It looks like what happened to really kick that stock into high gear back in November was KKR essentially bought a good chunk of them. They infused $1 billion into the company, and it was about a $2.5 billion deal. It's like they bought their retail hair business, professional and retail hair business. So Clairol and some of those other brands. KKR bought those from COTY and injected a whole bunch of cash into the entity. And so it looks like they own 60% now, and COTY owns the remaining 40%. So that's what kicked it into high gear there on that chart back in last November. I don't know why it spiked recently and then sold off again. Maybe some folks fading this combined deal. But I'm kind of with you, Mr. Rock Lobster. It takes a lot for me to really get super jazzed about buying a bunch of now in the money. They were out of the money calls not too long ago here. And for an 80 vol, you got to really show me something on a stock that's already $8 for me to want to get in on that action. As we've seen on a lot of these trades, the better way is the other way, which is, of course, the premium harvesting. But we'll keep an eye on this. What are your thoughts on this kind of reformed COTY Frankenstein's monster, listeners? You like it? You in? You down for this? You want to get in on some of this upside action? You want to instead sell the put? Hit us up. Let us know what you're thinking on this name. You want to just take the stock and write calls against it? You could do that too. A lot of different ways you could go with this bad boy here. Let's go on out now to another name out here that our Eye of Sauron is fixing its gaze upon. I do believe this is a newcomer. This is American, it'd be VICI. If it's Italian, it'd be VICI. VICI Properties, VICI. Ticker symbol, VICI, VICI. I'm going to pronounce it the Italian way, because why not? VICI Properties, this is a REIT specializing in casinos based out of NYC. Oh, this is a spinoff from the Caesars bankruptcy. That's what this is. Okay. And let's see. They're trading almost $30 exactly right now. A year ago, they were trading $23.77. They've kind of had a long, slow surge to the top, a few fits and starts, but it's been mostly upward trajectory. It looks like they actually topped out at about $33.35. That was back on, guess what day, listeners? June 8th. Go figure. That date rearing its ugly. I need to commission a study on what's going on with June 8th last year and this year to see why that date is kind of the apex for a lot of the names that we've talked about here. And VICI, clearly one of them, sold off pretty much ever since June 8th, got down to $29.30 again before kicking it back into rally mode, got up to, looks like $32 almost exactly on September 3rd, and then kind of gave it up again, right back down to $30 even right now. So looks like it has struggled to regain those highs. It has not been successful. Let's see what our Eye of Sauron found out here. Oh, we're going to the opposite side of the fence now, Mr. Rock Lobster. Forget your super optimistic call love. We're going to the dark side. We're buying some puts. In particular, it looks like 5,000 of these SEP 30s going up for the old 3/8. You don't see that much anymore, Mr. Rock Lobster. Kind of heartwarming to bring that back. Oh, the old days trading in teenies and eighths, listeners. If you're new to the options market, you didn't have that joy. So many high-level trades broke down to your ability to do very basic fraction math very quickly in your head. That kindergarten math you learned, up to like third or fourth grade, yeah, that really impacted some multi-million-dollar trades. So put that in your pipe and smoke it. The implied vol here, about 29%, so decent. It's certainly no COTY at a 70%, but for a name like this, a REIT, you could argue that's a decent amount of vol. They were offered at 40 cents, so they got a little bit better. And let's see, the stock was a little bit north of where it is right now, 30.25. So I'm guessing these are looking a little bit better. Oh, by the way, I should mention for COTY, there are earnings in this options lifespan. They're on the 4th. So there is some earnings love baked in there as well. So maybe that changes your opinion of that call trade a little bit. In terms of this bad boy, VICI, there are no earnings. The next earnings are on October 27th. So no joy here. Mr. Rock Lobster, are you more enthused by coming in and paying the old 3/8 for some dark side 30 puts here in VICI? Veni, Vini, Vici.
Wow, they really did hit the old 3/8, 375.
Yeah,
huh?
Yeah. You don't see that much anymore.
It always blows people away when I convert fractions to decimals, or I could add fractions together like, okay, 1/16 plus a quarter, and their brain just totally melt. And I go, it's 5/16, It's like, they're like, how do you do that? I go, well, I don't know. I did it for a little while. It's like.
That was a serious part of our training. I was an Ivy League graduate getting, racing others to do 3/16 plus 5/16. So, in your head kind of thing. But you needed to be able to do that if you're going to break into the S and actually make markets. It sounds absurd. And now add on to that, listeners, the layer of keeping in the back of your mind where the levels are in each month and how much, let's say, June is a half a buck, let's say, below where your sheets are, and Jan is going to be a quarter of a point or 3/8 higher, and you have to adjust those markets accordingly in your head while you're doing the fractions. Oh, it was good times, Mr. Rock Lobster. Good times are had by all, sir.
Yes, it was. I remember many of brilliant students breaking down in tears because they couldn't add fractions fast enough. I go, sorry, dude, if you can't add a quarter and a quarter, like the trade's gone. You know, I don't care how smart you are, but you'll never get a trade. So anyway, okay, we digressed. VICI properties, dark side put purchasing. Let's see here. Interesting. So do you find this one it does look like a little put purchasing. What are they worried about in this one? Interesting one, right? Let's say you've got a steady and growing dividend payer. So you're paying divvies about $1.45, $1.42 a year. So you have like what, a 4% dividend yield, something like that. 4.5%. Is this a REIT? Owning a
yes, it is.
Real estate access.
It's a casino REIT.
It's a casino REIT. Yeah. Okay. And I personally think this is I think that the Delta news, goes, you don't hear the Delta news about all the other countries, just this country, but it is improving, right? You take the vaccine, it's effective of keeping you out of the hospital. Delta or any of the variants, to be honest, but doesn't mean you can't get it. Of course, they don't tell you that. It would be easier if the CDC just told everybody that, and then it wouldn't be a surprise. But in this case, I would say, I don't know why the stock is down so much. Maybe, again, because they're kind of, they sort of smash some of these companies that are very, like Delta sensitive. So, the put purchase, is it tied with stock? It's an interesting one to keep an eye on for the listeners. Like if it has like one of those kind of waterfall sell-offs. And then I think I could be interested in like a put sale on this or something like that. It's pretty close to actually it's way above its all-time high. So, maybe somebody knows something on this one. I would say. Interesting one, because they're not really trading the earnings. I think this is one to put on the list, and let's visit this one. After expiration.
In a couple of weeks, not that long.
Yeah.
We'll be back to this. That's what makes it interesting. They only got a couple of weeks for this bad boy to pay off. Now they're not paying a ton, listeners. They're not paying $5 or something like that. Only a mere 3/8. But still, it's a very short time horizon, and it's pretty much at the money. So we're hovering right at that strike right now. So I'm with you. This one's kind of intriguing to me. Vanni Vidi Vici. We will come back and see and perhaps conquer this one when we return in a couple of weeks. You like this one? Are you down with this one, listeners? Are you buying what this guy is selling out here? You think there's a little dark side to come? Is he spooked about something? Someone's putting some money where his mouth is. Let's go, before we get out of here, let's go a quick review here. I love myself an appropriate ticker, and Molson Coors Beverage Company Class B, aka TAP, certainly fills that bill. Back on the 29th of July, listeners, we were talking about some TAP AUG 45 puts going up 7,900 times right there on the bid. They weren't playing around. I said, what's your bid? 20 cents? Okay, we'll sell 8,000 of these bad boys there right on the bid. This was pretty much immediately after the earnings. So they decided to get what vol was left before it vanished completely. It was about a 30 vol out there. The stock was 49.20 or so when these puts went up. And fast forward to AUG expiration, listeners, the stock closed at 47.80. So I said these were the 45 puts. So those puts were nowhere near being in jeopardy. Not surprisingly, they were all still open going into expirations. Looks like Mr. Rock Lobster, they pocketed a cool about $160,000. Again, you can buy your significant other a decent mobile for that money, sir.
Now, I am surprised none of the listeners have written in and asked the question, why is it always the same cost for these things? Nobody asked that question. Like, but that's why I still think my thesis on the girlfriend's Ferrari is still the best.
What is the sticker price, starting sticker price for like a base low end Ferrari? That's where we need to start working.
I think, a used Ferrari like $150, somewhere around there. A new Ferrari, I don't think you can touch one for less than $300.
Yeah, it's got to be at least $250,000, I would think, for a new one. Yeah.
Since I left the big city, I don't look at Ferraris anymore because I couldn't even drive one down my driveway.
They don't really make the off-road Ferrari these days, do they?
Yeah. Yeah. It would be all scraped up.
Of course, if Lamborghini can make an SUV, then anybody can, right?
Yeah, I can't even imagine driving that thing, I don't know. It would give me a head. Anyway. Besides, in Maine, you have to get a truck. You lose a tooth, then you get a truck. That's kind of the law.
You said it, not me, sir. Send your hate mail from the Maine Department of Tourism to Andrew at optionpit.com.
It's a friendly state. It's a friendly state. So this is like line in the sand. I think some of these beer companies, do you remember Sam Adams? Didn't they get smashed recently? As I recall, like right now, if you look at like Molson, right? The high of this stock, not very long ago, or like 2018 maybe, $87. Trade as low as 33 during the thing, $44 right now. Again, pays the big dividend. Makes money, like a pretty cheap stock. I don't know what's going on with it. But like I think $40 take on this stock is is good. 45 I think is aggressive, but you're also getting a pretty cheap stock on this. So I don't know. It doesn't look very expensive to me as a stock. I think it's just boring, What are you going to do? Apple goes up 25% in 1 year. People are going to buy Apple. They're not going to buy Molson. But from a value play, Molson is delivering, let's see here. They did cut the dividend probably due to COVID. They pay a decent dividend a year. They used to pay over $1 a year. So, and they cut it back since the COVID thing. I still think a pretty decent value play. So I don't think this is too bad. But it looks like they pocket it again. They can get a decent used Ferrari out of it.
They got their decent Ferrari out of it. And you're right. It looks like Boston Beer Company got shellacked today, off 40 points at one point. Or now they're still off, let's see, on the day, about 4.5%. They got about 20 points back, but they're still off 25 points. So, man, not good numbers in the beer space. But you know what? You're talking about value, Mr. Rock Lobster. You folks didn't get your value on Monday because you all missed out on Uncle Mike. But I'm pleased to say he's here for you right now as we head on into a special Thursday edition of the Mail Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
And it'd be helpful if I know my own show. Yes, Uncle Mike's segment is called the Strategy Block. And that is what we are embarking upon right now, a special Thursday edition of the Strategy Block. Mr. Uncle Mike, sir, what do you have in store for us? I know it feels weird doing it on a Thursday, but let's see if you can handle it, sir.
I love doing it on a Thursday because I didn't get to do it on a Monday. So what I want to talk about today is just some ways with which I look at the S&P 500 in that what are some of my key numbers? What do I look at? Why do I look at it? And what helps me to make decisions? So the first thing that I look at is the open and close for the year, or the open for the year. And the way with which I like to manage risk, and this is with my aggressive strategy. I'm not talking about holding on to longer term stocks or selling calls and longer term holdings with stocks or things like that. But with my aggressive strategy, what I like to look at is where the market begins on the year. And when we're below that number, let's say the S&P were to open up at 4,500. That's right where it's at right now. As soon as we go below 4,500, I like to take a vast majority of my exposure off the table. And the reason for that is that if you aren't in the market when it goes negative, if it continues to go negative, then you won't get hurt. Where I came up with that number or that idea was in 2008, and so I was a veteran of the industry of 5 years, and I wanted to start the year off. I got all my bond holdings in, and so it's the first day of trading, and I'm thinking, okay, I want to get some of my stock holdings in. Now, I had some other longer term things going, but for this one specific strategy in the portfolio, I'm looking at, I'm like, you know what? We are having a down day here, the first day of the year of trading in 2008. I'm just going to wait till we actually have an up day. I'm just going to try this. It was just on a random whim that I did that. And then, of course, as anyone who knows market history knows what happened in 2008, we lost a lot of market that year. And so I learned a valuable lesson just by accident that year and looking at it thinking, you know what? I am going to just stay out of the market when it starts to go negative. Now, of course, the disadvantage to that is that if the market chops, if it goes up and down and just stays kind of where it is, then I'm going to get chopped out, like I did in 2015. But the advantage is that I'm not going to ever have to, you never say never, but I've never had to, in all my years in the business, have to call a client and say, I'm sorry, Mr. Client, but I've blown out your account. I've never had to say that. And I never will, quite frankly, unless I make a trading error. So I'm very cognizant of that. And that's why I really emphasize risk management first. Market sentiment needs to come a very distant second, quite frankly. Now, the next levels with which I'll look at, I like looking at key numbers. For example, right now, we're around the 4,500 mark. And the market seems to like to do kind of a magnet effect to key numbers like that, 4,400, 4,300, 4,500. And so as soon as we get going a little bit, a lot of times we'll pull back. And as soon as we get below it, we go back to it. Now, does that mean that's going to hold true for right now? No. But it does seem to be something that does actually happen. The ways with which I'll base my trading around that are that I won't necessarily get out when we get to certain points, but I'll wait to add more until I can get it confirmed to where we're through those points. That's kind of more how I like to do it. In terms of getting out and managing risk, I like not having a lot of risk to begin with. So I'm more concerned about getting in and putting more on the table. I'd rather miss out on a rally than be overexposed in a downturn. Then the final thing that I like to look at is when we're at new all-time highs. I have my trademark saying on the show that I'll say when we do that. And then I'll kind of view that as kind of an important number in that, let's say we make a new all-time high on Monday. On Tuesday, if we're below it, I usually don't like adding more until we get above it. Now, once again, I can't say that this is something that I hold true to and fast to all the time. But what I do hold true to all the time is having a viable amount of dry powder, if you will. So that way I am managing risk in an efficient manner. So with that, that's kind of how I like to view things. I'm not much of a chartist, even though Longo calls me the resident technician of the show. And I'm not much of a fundamentalist. My philosophy is that the market has gone up throughout time over the course of the last 100 years. Just try and stay out of the way when it doesn't. And that is the strategy block for today.
There we go. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's tell you what we're keeping an eye on until we gather here together, at least for this program again on Monday. Mr. Uncle Mike, we'll start with you, sir. What are you watching through the weekend until we gather here together to pick wrestlers again on Monday?
Absolutely. I'm watching the 4,500 mark on the SPX. I want to see if we hold to that or if we can rally from it. Right now, when we had a little bit of a sell-off earlier in the show today, we went to it and we're kind of staying at it for the time being. So watching the 4,500 mark, I believe that's a key number.
And Mr. Rock Lobster, same question for you, sir. What are you watching? What VIX zone are you fixated on right now?
Well, so yesterday I said it was an inconclusive vol day, but you do have a lift in vol today, and we're not really moving much. So Mike was right. Yesterday we had about a 1% move. So like I think the market is definitely having you got some ECB tapering, you got Biden announcing some more strict COVID stuff, but we'll see what happens. But as of right now, the market is not looking at it kindly overall. So I'm looking at this level, and I mean, at this point, we're 1 point away from 20 VIX, so it would not surprise me if it got there, but it's sure taking its sweet time.
Unfortunately, this show isn't taking its sweet time. We are done. We are out of here. If you're listening live, if you're part of the secret club, then stay tuned, relax, grab a beverage, we'll pump some fun stuff in there, some OPRs, some OBCs for you to enjoy. Then we'll be back in exactly 28 minutes with the once and future Dr. Vix to break down all things equity vol, as well as a bunch of other vol throughout the world of futures options. But before we go, let's go back around the horn. Let's start with the Unklest of Mikes. Mr. Uncle Mike, sir, if folks are intrigued, they want to hit you up to talk SPY SPX levels or pretty much anything else under the sun. Where should they go? What should they do?
My website, stcharleswealth.com, or follow me on Twitter at Mike TOSAW, TOSAW.
TOSAW. And of course, Mr. Rock Lobster, if folks want to hit you up to check out your newest product, the Capital Gains, where should they go? What should they do?
Yeah, go to optionpit.com, just go to memberships, or you can call, we have a phone number, 188-TRADE-01 and talk to Ted. Option Pit is, it's hard for me to say, but it is twice as big as it was last year and twice as big as it was the year before. So we are growing a lot, so people must like something. So come on over and check it out. If you want to put your option learning on, also get some great trade ideas to boot. So Option Pit is the place.
Optionpit.com. And of course, we'll be back in 27 minutes. If you're listening after the fact, as I know many of you are, just hit next on your device of choice. Should be a fun TWIFO show there waiting for you. Of course, we'll be back here waiting for you noon Central, 1 p.m. Eastern tomorrow for Ball Views. And then after that, for all of you in the Pro Club at 2 p.m. Central, 3 p.m. Eastern for Options Oddities. Then back again on Monday, another episode of The Option Block. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.